Okay, well, let's get going. And good morning, everybody. Welcome to this webinar. It's in our Shoesmith series for in-house lawyers. And the aim of these is to help you stay up to date with what you need to know in the legal world, so you're prepared for what's coming up. My name is Sebastian Price. I'm a partner in Shoesmith's commercial group, and I'll be chairing today's webinar, which is on the changes of IR35 relating to the use of contractors, which I'm sure we all do. As usual, it's a half-hour session, and we'll try to cover the questions you've sent us. And if you have any questions as we go through, please do use the Q&A function. We'll aim to answer them as we go along. And by the way, any topics across the legal world you'd like us to address in future webinars, do let us know, and we'll aim to put on one of these sessions on that for you. Anyway, so let me introduce my colleagues, Gwynneth Tan and Stuart Lawrenson. They're the experts in how to deal with IR35. They're both partners in our employment team. They've been incredibly busy this year with everything that's been going on, furlough, for example. And they're also, they're currently advising many clients on the IR35 situation and how to deal with the changes. So good to see you, Gwynneth and Stuart. Thank you very much for coming on to do this.
Good morning, everyone.
Stuart, could I start with you, perhaps? Actually, just one thing before we do. I can confirm you are not that. Stuart, let's get on to IR35. So tell us, what is IR35? What's happening? Who do the new rules apply to?
So what is IR35? Well, basically, in short, it's a nickname. It's a nickname given to a piece of tax legislation, not even employment legislation, but tax legislation that was first introduced way back in April 2000, designed to prevent disguised employees from avoiding tax. It's now officially known as the off-payroll working rules. What do we mean by disguised employees? Well, it's disguised employees are individuals who act like employees, but who disguise themselves, usually through a company, to provide their services, usually through an intermediary, often a personal service company. Those of you who are familiar with the subject will know that that's usually shortened down to PSC. And so it's one of those but-for tests. But for the intermediary or the PSC, if the relationship between the end user and the individual is one of employment, the worker is said to be inside of IR35, and therefore they are a worker as an employee for tax purposes. And currently, it's the intermediary's responsibility for making that determination about where they sit from a tax status perspective. And if they fall inside, then they need to account for tax from an income tax and national insurance perspective. And here lies the problem. And the problem is that only 10% of those who are believed should fall inside actually do. Or put another way, it's potentially costing Rishi as much as £700 million a year in lost tax. And given what's been spent out at the moment, or going out of the government's coffers at the moment, I think he could do with some extra tax money coming in. So from the 6th of April, that's the key date. That's the date that everything's going to change. Responsibility for determining whether or not somebody falls inside or outside of IR35 is going to shift to the end user. And that's going to apply for all large and medium employers. So the next question that I probably need to answer is, what do we mean by large and medium employers? You'll be large if you meet one of or two out of three criteria. So if you've got more than 50 employees, excuse me, if your net aggregate turnover is over 10.2 million, or if you've got more than 5.1 million on your balance sheet, then you'll be deemed to be either large or medium. The only point I'd flag is that if you're small, but your parent company meets any of those criteria, then you're still going to be caught. Just to flag, if you're a small employer, then nothing's going to change. It is still going to be the responsibility of the intermediary to make that determination. So in reality, that's going to be the contractor. So the net result of this is it's going to be the end user who's got to make that determination going forward to determine what their tax status is going to be. And under the legislation, it's going to be the phrase is the fee payer, so the party one up from the intermediary or the PSC, who's going to be responsible for making the deductions prior to the monies being paid. And the only point I'd flag here is that this doesn't apply in relation to where services are fully outsourced. Now, I appreciate that some of that terminology can be a little bit confusing, and it can sometimes be a little bit difficult or strange to work out who is the end user and who is the fee payer. And the chains can be quite complex. So I am going to bring up one slide now, if I may, and I'm just going to talk that through so that everybody's got an understanding as to where everybody sits. So if somebody could just bring up the slide, please.
Yeah, it's just loading. Should be a few seconds.
Fantastic. So hopefully this is nice and clear, and we've used this in previous seminars and it's gone down quite well. So on the left-hand side, we've got the most straightforward, I suppose, of supply chains. We've got the end user, the hiring business at the end. We've got the intermediary, the PSC, and then the worker. And in that situation, the end user is responsible for both making the tax status determination, and they will be the fee payer because they are the entity that sits above, basically one above the PSC or the intermediary. So they fit both roles. Moving along, we've got a slightly more complicated chain where we've got an end user hiring business. We've got an agency. When we talk about agencies, we're not talking about an employment agency in the normal world that Gwynneth and I advise on, but let's just call them an intermediary. Then we've got the intermediary PSC and the worker. So in that situation, it's always going to be the end user that's got to make that determination as to whether or not the worker is inside or outside of IR35. But in this occasion, it's the agency who is responsible for making the deduction from a tax and NI perspective. Why? Because they're the company that sits one above the intermediary. And in some of these situations that we've had to advise on, the chains can get really, really complex. So moving along, we then have another scenario where, in fact, in between the end user and the intermediary, we've got two agencies. These contracts, these chains can be very, very complicated. Again, still the end user who is responsible for making the status determination. But then in this situation, it's agency 2 that is responsible for deducting. Again, why? Because they sit one above the intermediary PSC. And then the final slide talks about the scenario which I've just mentioned, is that it doesn't apply where services are fully outsourced. There's some specific guidance about what that means. But in that situation, it's not the end user who has to make the determination, because in a fully outsourced service, it's deemed that actually it's the service provider that is the end user. So in that situation, the service provider, very much we're mirroring the scenario almost in scenario 1. So it's the service provider then becomes the party that's responsible for making the determination and for deducting tax. So I hope that slide has been useful to bring that to life a little bit.
Yeah, no, thanks very much, Stuart. And I noticed you use the terminology intermediary and PSC. So, Gwynneth, perhaps you could address that one. Are those the same things? Are they interchangeable, those terms?
So, but that's actually a really good point, because this time last year, the intermediary was typically the individual's PSC. Because when the intermediary was a company, it needed to be a company which the individual had a beneficial interest in. So at that point, you would see the terms PSC and intermediary being just used interchangeably. But I think now what's happened is that since the draft legislation last year, HMRC's cotton on to the fact that actually they're outside. There are lots of companies out there calling themselves umbrella companies, who are signing contractors up to arrangements which claim to save these contractors tax, and obviously, very attractive for the contractors. But what the HMRC say is that these are in effect tax avoidance schemes. Traditional umbrella companies, you will find, deduct PAYE and national insurance contributions from the payments they make to the end worker, but this new breed of umbrella companies don't, and this is what the government has ended up clamping down on. So definition of the intermediary has now widened, and it goes beyond your typical PSC. It's always been the case that an intermediary can also be an individual or partnership, but we don't see this very much. So that's always been the case. Where the legislation has changed is that where the company, which is the contracting party with the worker, typically the PSC, where that company isn't an associated company of the end client, and either, and this is where the widening has come from, either the worker has a material interest in this company, i.e. your typical PSC, or now if the worker also receives a chain payment from this company, then that company will be the worker's intermediary. So this effectively now covers those umbrella companies which the worker is engaged under, but the worker has no material interest, and it brings them into the IR35 considerations. And I think the takeaway here is that the questions which maybe the end user client used last year to its contracting party about, you know, what the labor supply chain looks like, those questions are now needed to be framed much more widely to ensure that they do capture all those end individual workers who are going to need a status assessment carried out, and who perhaps didn't need an assessment carried out last year.
Well, actually, Gwynneth, we're getting some questions about how to tell what the status is of in this context, and given that I imagine most of the people on this webinar, you know, representing their businesses as in-house counsel, will be end user clients in this context. How should they go about determining status?
I think the first thing to know, and a very important point, is that end user clients will need to look at each engagement separately. So they can't just carry out a status determination exercise for that worker and think that it will run for all the different contracts that the worker is engaged on with the client. But essentially what the client needs to do is to consider the relationship with its worker. Is that relationship one of employment, or is it one of self-employment? And this is purely for tax purposes here. And then they've got to confirm their decision in what is called a status determination statement, and we call it an SDS for short. Once they've done that, they have to pass that status determination to both the organization it's contracting with and the individual worker at the bottom of the line. Now, there's no set format for this SDS, but our advice is to include as much detail of the basis for the decision as possible, because that's going to have to be relayed to the end workers to why and to justify the decision made. We're helping clients with a template so that they can approach this consistently. Also, the HMRC have an online tool. Many of our clients and contacts will be familiar with this. Perhaps it's an online tool to assist with the assessment, and it's called Check Employment Status Tool, CEST for short. And these assessed results at HMRC have said they'll stand by if the questions are answered properly. HMRC have also produced a manual called the Employment Status Manual, which provides really good guidance on how to answer the questions. Questions which the client will need to answer will be around control and direction, i.e. of its control and direction of the worker, whether or not the worker gives personal service, whether the worker is integrated into the client's workplace, the financial risk which the worker has. But one of the criticisms of the CEST is that it doesn't actually take into account a really important question of mutuality of obligation, i.e. whether the client is obliged to offer work and if the worker is obliged to do the work. HMRC has actually defended this omission on the basis that they think that if you've got a contract in existence, it assumes an obligation that that work is needed to be done. Otherwise, they're saying the contract won't exist. But to be honest, that's a whole different webinar in itself, about mutuality of obligation, all the different factors about employment and employment status.
That's for the contract
Now,
law club.
yeah, absolutely. And I just want to say, as a word of warning, CEST isn't perfect despite recent updates, and it does sometimes produce an unable to determine result.
Crikey, that just sounds so frustrating. So, I mean, what should organisations be doing? I mean, what do they do if that happens?
Well, I think the first thing, and I know it sounds a bit trite, but actually, check the answers provided to make sure that all of these are being provided correctly. And then they're going to have to consider the further factors of the working relationship to arrive at their own conclusion. They may need to delve into some of the answers provided to eke them out. But this, bringing back into this fold will be the question of mutuality of obligation, because this is an area where we've seen HMRC last year lose several cases. On its own tax rules, and it's something we've been helping clients a lot with in terms of helping them reach a determination on the status of their workers. HMRC does have an helpline. I would say it's a bit hit and miss. Some of them know their stuff, some of them not so much so. But it's worth a try. But I think at the end of the day, what needs to be done is the client will need to take reasonable care in carrying out the determination. And that's something which HMRC has incorporated into its rules. What the client cannot do is make blanket status determinations, because if they do, then they're going to end up being liable for all the tax deducted for the workers.
Reasonable care. Well, we lawyers love a bit of reasonable, but what on earth does it mean in that context?
Well, funnily enough, the guidance from HMRC says you've got to be prudent and reasonable for reasonable care. But to give HMRC its due, it has expanded on this a little bit, and it does say that reasonable care includes applying the HMRC guidance on determining status accurately. So again, no blanket status determinations. Thank you. Making sure that you're not trying to shoehorn what you think the answer should be into the actual answers you give. So giving very honest answers to the questions in the CEST tool. Making a new status determination statement if there are going to be changes to the working arrangements. But what HMRC has said is going to be really important is also client size, the experience and circumstances of the client. That will be really relevant. So the more, the larger the organization of the client, the more care the client will be expected to take. And funnily enough as well, that HMRC has specifically said they need to, clients need to seek professional and qualified advice.
And what happens if the contractor doesn't agree with your determination? What happens?
They can actually challenge them. They can challenge both a contractor and the fee payer can challenge a status determination at any time if they think it's wrong. So if they think that the working arrangements have changed, they can challenge it. Or if they simply think that the determination has been wrong from the outset, and they can challenge it verbally or in writing. And the client will have to make a response within 45 days of the date of the challenge. If that challenge is made before the final chain payment is made to that engagement, if the challenge is made after they've received the final chain payment on that particular engagement, then there's no need for the client to respond at all. Now, in the response, the client must inform the challenger, which obviously is the worker or the fee payer, that it's considered their representations, and either it's decided that the SDS is correct, and if they do so, they have to provide reasons for doing so. or they've agreed that the original conclusions were wrong, and that probably may be more so in terms of where the working arrangements have changed. And in that case, they've got to provide a new SDS with the date the new SDS became applicable, and then they state that the previous SDS is withdrawn. So it's quite a simplified system.
Okay. Okay, I understand all that. So, but what would the implications be for getting it wrong, Gwynneth?
If they don't carry out an SDS at all, if they, for example, don't ask the right questions, so they don't identify the right category of workers or the right bunch of workers to carry out an SDS on, and they miss that SDS, so either they miss carrying out the relevant SDS, or they don't pass its SDS onto the organization it's contracting with and the worker, then it will be left with responsibility for the tax and NI contributions due, rather than that responsibility passing down the chain to the fee payer. It will be left with the client. And also, if the fee payer, such as the agency, if they don't pay the tax and NI contributions which are due to be paid, then the liability passes back up to the client, up the chain, and it can end with the end user client. So it's really important for this reason that, you know, when end users are entering into contracts with their contracting organization, you know, they embed into that appropriate warranties and indemnities to protect themselves.
Okay, thank you very much. Stuart, back to you. I think you know, we've probably all seen that these changes initially were due to come in last year, I think. Then they were postponed. So is there any difference now, you know, between now and then? Oh, can't hear you, Stuart. Still can't hear you.
Can you hear me now?
Yeah.
Oh, now I can hear you.
I was off mute. Sorry, everyone. I was off mute. I promise. Yeah, but Seb is right, and I'm still not a cat. Hopefully, yeah, they were they were postponed last year. They were postponed at the last minute. I think it came as a bit of a surprise, particularly from a revenue income perspective they've already mentioned. Since then, HMRC's CES tool has been updated. It was updated back end of November last year, following criticism that it wasn't fit for purpose. It was giving out, when a lot of those, you were putting a lot of inputs in, they were just coming up with the answer almost like too difficult to provide you with any sort of clear determination. So I think it is a positive outcome that it has been updated. So you need to review the updated CEST. All of the questions in CEST now need to be answered before a determination is given. And certain sections of the absolute, I can't stress enough, must read tax status manual and the guidance that supports CEST have been updated. And as I say, I can't stress it. Some of the questions in CEST are still quite opaque, quite strange in the way that they've been asked. And actually, to understand how you need to answer them, you really do need to read the guidance that's in the tax status manual and within the CEST guidance. One potential negative that's changed since last year is that before, HMRC basically said, well, look, if you follow CEST, we will stand behind that determination and you'll be okay. And what they've now said is, they said, we won't stand by results that are achieved through contrived arrangements designed to get a particular outcome from a service. So I think it's probably sensible. It should have been there in the first place, but it's not going to be an automatic thing that if you carry out CEST, you will automatically be covered. You still need to basically carry out that reasonable care that Gwynneth's already referred to.
Okay, apologies everybody, Stuart, we just lost you a little bit in the middle of that. But what I'm really keen to get onto, if you could, is you know, practical steps, because I know that probably last year a lot of organisations did carry out preparatory work, etc. But is there anything else that they should be doing now?
It depends on what steps were taken last year. I think even for those organisations that did get through their IR35 to-do list, there will still be a few things that will need to be carried out, because let's face it, a lot can change in 12 months. Boy, oh boy, do Gwynneth and I know that as employment lawyers about how much the world can change. But if your business, in the way in which you interact with your contractors, has not changed that much in the last 12 months, then hopefully you won't have too much to do. But it must be remembered that arrangements with contractors can change, they can develop, they can evolve over time. Employees, managers can forget, with everything that's been going on, what they should be doing is about how managers and how contractors should be managed on a day-to-day basis. New contractors may have come on board over the last 12 months. They may have presented their T's and C's in the last 12 months, and during the chaos that was 2020, you might have forgotten about all of the changes that were coming in to force as a result of IR35. Your position in relation to risk as well may have changed. Are you going to be one of those employers that's been mentioned in the press that have basically said, you know what, actually from an IR35 perspective, we're not going to have anybody who is going to be outside of IR35? And those complex changes that I referred to earlier on may have changed as well. So you need to review all of those contracts to make sure that they contain the relevant indemnities, warranty protection that Gwynneth already referred to.
Okay, and then, so just to finish up as we approach 11 o'clock, from the point of view of in-house counsel on this call, what anything else that should be on their to-do list, either for them to do or for them to get the business to do?
Yeah, I think probably needs to be a bit of an audit. I've been having some interesting conversations with clients recently, and sometimes the management of contractors can be a lot more sporadic than the management of employees. So carrying out an audit of exactly what is your contractor population. Absolutely, you need to review your T's and C's with your contractors. We're getting a lot of requests at the moment to review contractor agreements, particularly tripartite ones, to make sure they've got relevant IR35 provision in there. Discuss what your approach in relation to contractors are going to be with the contractors themselves. Gwynneth and I often talk about employee engagement and managing employee relations. This is a slightly different position. This is about managing contractors and contractor engagement. You're going to need to think about training managers who appoint contractors. Think about training on CEST. Get your precedents in order, not just your tripartite agreements, but your status determination statements, appeal processes, and think about how often you're going to review things, because, as I say, arrangements with contractors are going to change. Some contractor arrangements can change, can last a very long time. How often are you actually going to review those arrangements to make sure that your determination is still correct? Think about cost and budget implications, and think about as well, when you're advertising for roles, are you going to advertise those roles as being either inside or outside of IR35?
Excellent. And we've got a quite interesting question. Is this the end of independent contractors, do you think?
That's a question that I've been asked already once before, and my view is I don't think it is. Absolutely not. I don't see this as the end, but I do think that this is the end for those arrangements where either end user clients have almost looked the other way because it's been the intermediaries, the PSC's responsibility. Some of these big banks, for example, who have turned around to their entire populations and said, no, we're not going to be doing that. Undoubtedly, that is because they've had these arrangements whereby these contractors have probably been working there for ages, full time, under their control. And the reality is they've been employees, and these individuals should have been accounting for tax all of that time. So I think there'll be end of those sorts of relationships, but absolutely not. This isn't the end of contractors as we know.
Well, that's great. I mean, what it is the end of is the end of this WebEx. We've hit 11 o'clock on the button, which is great. Thank you very much. Well, everybody, as you can tell, Gwynneth, Stuart know all about IR35. I know they'll be delighted to have a chat with you if you just want to pick up the phone and talk anything through with them. They'll be really happy to do that. But thank you very much, Stuart. Thank you very much, Gwynneth.
Thank you.
Thank you, everybody, for joining. It's absolutely great. And so goodbye for now.